Good morning. Today I'm going to do a tutorial on how we could have used my multi-time frame analysis approach to participate in this large bond rally that has happened this year. Yes, this is hindsight, but this does demonstrate the thought process and the approach that I utilize to apply this thinking to get into good trades on the high time frame. So first, I'm just going to explain my chart setup. On the left, we have the high time frame, which is a 12-month. The middle is the intermediate time frame, 2-week, and then the right is entry time frame, 12-hour. So first part of the strategy is determining a draw on liquidity, and how I do that is based on looking at candle closes. So to summarize, I'm looking to see whether candles displace above or below previous candles' highs or lows, or if they fail to do so. And then I also look at swing points in the marketplace. So we'll start over here. So first we see this 2017 candle closed below the low of 2016. So for me, entering into 2018, my target would have been for price to trade down. That would have been my target, is the 2017 lows. Here, this year, my target would have been we displaced below 2017 lows in 2018, so I would have likely had a target down here for 2019, which didn't happen, which is fine if nothing's perfect. So then we had a swing low put in. So a swing low is when the middle candle has lows on the immediate candles to the left and right that are higher than it. So it puts in a swing point, upside momentum. So in this case, we had a swing point and we also displaced well above this high, which would have meant in 2020 I'd be looking for price to trade up into 2019's high. Then we had this huge close way beyond the highs. So in 2021 I would have been looking for price to trade up into that high, which it failed to do. We actually put in a swing point here. So then we got a swing high. So a swing high is where the middle candle has on the left and right of it candles that have highs that are lower than it. So that's momentum to the downside. So in 2022 I'd be looking for a price to trade down into 2021's lows. Then 2022 happened, this huge bearish candle. So in 2023, my target would have been for price to trade down into 2022's lows, which brings us to 2024. So when the 2023 candle closed, what I noticed is price traded below 2022's lows, but it failed to displace below. So for me, that shows that there's some bullish momentum in this market, and thus my target is this high. I've got this marked as yearly draw on liquidity. It's a concept taught by Inner Circle Trader. If you want to know more about how he explains price and the price delivery, I'd recommend you check out his YouTube, and I'm not going to go into much about the concept of draw on liquidity. It's just a way to say yearly target. Draw on liquidity is my target. So now that we've identified a target, now we're going to look at when does the year start. So the year started right here. Okay, so my strategy is basically, first of all, takes a close look on the intermediate time frame to determine, is the market delivering in a bullish or bearish state? If my target is long, in this case as it is with the bonds, I need price to either be delivering bullishly, or price needs to trade down into a swing low for me to look for an entry. So basically at the start of the year, we saw price started delivering bearishly. So bearish delivery is where the lows of up close candles get closed beyond. Okay, and then the highs of the highs of down close candles get respected. Okay, so start of the year we started delivering bearishly. We did have this happen here, a change in the state of delivery to the upside, which, if we look, price traded down into, we created an order block here, was that this down candle, which led to this change in state of delivery. Price traded down into it. We got a change in state of delivery on the entry over here, which would have been an entry, a confirmed entry on this candle here. When this closed above the high of these down close, that would have been an entry right there. And as we can see, this one didn't play out. We also got offered the 18 period, or the 10 high 8 close moving average channel entry. We had two closes above the moving average channel with the accumulation distribution index above its 57 period moving average. That's another entry if we miss that one. And then we also got offered the 18 period moving average entry when it took out this high right there. So there was all three of our best entry confirmation techniques gave us entries there. So we would have taken, if you only took one of those entries, we would have taken one loss trying to long this market this year, which is okay. So then we trade down into this swing low. So you see I put in a swing, price put in a swing low here, price trades down below it. If the market trades into a swing low and I'm looking to go long, that is a satisfactory place to look for an entry, which we got one of our entry criteria matched here on the entry time frame when price had a change in state of delivery here, closing above the high of this down close. That would have been a satisfactory entry, which quickly got stopped out. As we can see, we didn't get any other entry. We didn't get an 18 period moving average entry or a moving average channel entry. So we go on. 2 losses accrued trying to long the bonds. My purpose of showing you this is that this isn't a perfect strategy that's not going to have losses. It is a good strategy, but even the best strategies have losses, so just keep that in mind. So going on, we see price is now delivering bearishly. The low of the up close is getting closed beyond. So now the only place that I would consider looking for an entry is below the lows of swing lows. So I would have had these levels marked out on my chart as satisfactory places to look for longs. So going forward, what we see happens here is a change in state of delivery where the highs of these down close candles get closed above. So that puts me on alert that, hey, the intermediate time frame is in sync with my higher time frame target. Now what I need to do is mark off bearish arrays. So what I mean by that is, first of all, I'll mark off this right here is a 2-week order block. Where is it? Okay, so this is the down close candle. It's the big one. You could use this one too, but I use the big one that led to this change in state of delivery. Okay, so first that's an area we would look to go long. Then what we notice is once this candle formed, we put in a fair value gap. Okay, so price, you got the high of this candle, price goes up, and then you got the low of this candle. You can see there's this gap here where there's no wicks right here. So if price trades down into that, we see it overlaps with this order block nicely. That is a satisfactory place to look for a long. And as we can see, first of all, I don't know why that's there. We'll go over here. Okay, so right here we have our first entry with this candle close right here. So we have a price trades down into this point of interest. Our intermediate time frame is in alignment with our target, and then we look for our entries. So here we see a down close candle with its high getting closed beyond. This would have been an entry right here. Stop below the low, holding to 2023's highs. Okay, that's an 8.5 risk reward ratio trade. Then we see also we get oh no, that's an inside bar, so we get 2 candles closing beyond that aren't inside bars, closing beyond the 18 period moving average, and then we take out the high of those 2 candles. There's our 18 period moving average entry with 150% of the 3 period ATR as our stop. So there's that. Then we also got the moving average channel entry back here. So we had 2 candles inside bars where we don't consider or eliminate inside bars with the moving average channel entries. So we have 2 above full range bars above the moving average channel with the with the Williams accumulation distribution index down here above its 57 period moving average. That's our third long. So we got given all 3 of our long triggers here. The stop for the moving average channel would be you'd enter at market after this candle close, and the stop would be twice the width of the channel at the time of the entry. And as you can see, they've played out quite nicely. And this, so we've been offered 3 entries this year on this trade, 2 of which were losers. Now these other ones have offered incredible risk reward um, opportunities as far as the potential to make back those 2 losses and then some. So that's how we could have used this multi-time frame analysis to get involved in the futures, in these treasury futures. Now we could use the same approach going forward to also get involved again if we're offered a pullback in this market prior to hitting this target. So what I mean by that is we just mark off new premium discount arrays. So there's 8 days left before this candle closes. So let's say this candle closes something like this, like it is now, and then it creates a gap. Well, that'd be a perfect place to watch for longs if price trades down into that, and then gives us our 12-hour entry techniques to get long up into that high. Okay. I've also noticed that this is a redistributed, rebalanced price range. So basically a 2-week RDRB, wherever I have that. There we go. So basically we see this wick goes up, it's really small, this wick goes up, comes down, price goes up again, and then price. So basically this is an area that would be sensitive to price for a trade to the long side. And then we also have a gap below price. So if price trades down into these levels, it'd be a reasonable and good place to look to go long, assuming we're still delivering in a bullish state and no lows of these up closes get closed beyond. So I hope this is helpful and demonstrates just how effective this multi-time frame analysis is. And if anybody has any questions about how I do this strategy, I'm an open book. Feel free to give me a message. And I hope you guys enjoyed this tutorial. And if you did, I'm really glad I did my job. And that's great. So wish you guys a good week and good luck and good trading.